Today we will discuss accounting convention. So there are four accounting convention. First is full disclosure. So before starting the convention, I would like to tell what the meaning of accounting convention. Actually, accounting convention basically related with the tradition and practice, right? When we use the to and by word with the name of persons, asset, expense, and income while recording the transaction in the business. So, actually, to use the word to and by, this is the convention basically used in UK and India except USA, right? Now, first convention is full disclosure. Financial statement must convey the information and conceal any fact. Must convey information and not conceal any fact. That means full disclosure means every accountant must show every information which is very important by the help of financial statement. He don't try to conceal any facts, right? Your actually financial statement must disclose material, relevant and reliable information so that the confidence of the stakeholder must be built. So according to this convention, every important information which affect the stakeholder must be disclosed with the help of financial statement or footnotes, right? Second is prudence or conservatism. Student, prudence or conservatism convention basically tells that no one can guess the future business happening, so future profit will always be ignored, but the future expenses must be considered. So we cannot predict the future event of the business. So always we should ignore the future profit and always consider the future expenses. For example, closing stock is always calculated at the cost price or market price, whichever is less. Second example is provision for doubtful debts, and third example is provision for depreciations. Actually, these all provisions are maintained with the idea that future is uncertain, or we always ignore the future profit and always consider future losses. So according to this convention, we must keep the future expenses and we must ignore the future profit, right? Now third is materiality convention. Student, what is materiality? Actually, materiality means every information which affect the stakeholders, that is material, right? According to it, material detail must be given with due consideration while sending the report to the debtor. Accuracy must be maintained up to the paisa, but when report sent to the top management, then amount must be rounded off. Student, keep in mind, if you sending the report to the debtor, then you must clear the every amount in rupees as well as the paisas, because debtor want actually amount which he want to pay to you. And when you send the report to the top management, then numeric figure must be rounded off. I mean to say paise is converted into rupees. Fourth is objectivity. It must show relevance and reliability, right? According to objectivity, every journal entry must be passed on the basis of documentary evidence. Without documentary evidence, every entry which we try to pass is considered as a legal entry, not valid. So according to objectivity convention, every information must be recorded on the basis of strong evidence, right? Student, I hope you understand all the things. Thank you.